On January 27, 2026, I bought UNH stock while it was down 20% in a single day. Someone on X said the PE ratio looked cheap. That was good enough for me. On April 6th, it went up 11% and I made money. But I still had no idea what actually happened. So I went and figured it out. What I found is more interesting than the trade. Because the real reason UNH crashed 20% that day was not the number everyone was reporting. There was something else buried inside that announcement. Something worth $7 billion a year. And the person who decided whether to cut it off owned $550,000 in UNH stock. UnitedHealthcare is a private insurance company, and the US government is its biggest customer. Here's the deal. The government runs a healthcare program for Americans 65 and above. Instead of managing all of that itself, it pays private companies to do it. It hands UNH a fixed monthly payment for every senior UNH covers. UNH manages the care. Whatever UNH does not spend, it keeps as profit. Simple enough, right? Now, here is the part that matters. Once a year, the government announces how much that monthly payment will be for the coming year. One number, one announcement every April. Think of it exactly like the iPhone launched by Apple, but for the insurance sector. The whole industry reprices on that single day. UNH covers about 30% of all seniors on these private plans. So, when that annual number moves, UNH moves hard. Bigger than any earnings call, bigger than any CEO statement. That one annual number is the engine. And in January 2026, we got a preview. That number was shocking. On January 26, 2026, the government released a proposed payment rate for 2027. The number was 0.09%. Not 9%, not 1%, 0.09%, basically flat. Analysts were expecting 4 to 6%. Are you following? The gap between what was expected and what was proposed was enormous. The next morning, UNH fell 19.57% and did not stop. It closed at $282.83. That wiped up roughly $100 billion in market value in one trading session. If you hold any S&P 500 index fund, and most people watching this do, UNH is inside it. You felt that drop whether or not you knew the ticker. But here is what I genuinely did not expect when I started digging. The 0.09% rate was not actually the scariest part of that announcement. Something else was buried inside it. Something the headlines barely touched. And that buried thing is the real reason stocks moved as hard as they did. Insurance companies get paid more per person if that person looks sicker on paper. Sicker patient, higher government payment. So over the years, insurers started hiring companies to go through patient records and add diagnosis. Not from real doctor visits. No appointment happened. No treatment happened. Just a code dropped into a file. That code triggered a higher payment from the government. Look at what the Wall Street Journal found when they investigated this in 2024. 66,000 patients were officially diagnosed with diabetic cataracts. Cataracts are a clouding of the eye lens. Every single one of those 66,000 patients had already had surgery to have the lens removed. The condition was gone. Physically impossible to have it again. The diagnosis was still in the file. The payment was still going out. 66,000 people, one condition, anatomically impossible, documented. And that is one investigation from one newspaper covering one condition. The government estimated that stopping this specific practice would save $7.12 billion in 2027 alone. $7.12 billion. That is roughly what the entire US government spends running its disease control agency for a year. And the independent body that advises Congress on Medicare spending found that practices like this mean insurance companies collect $76 billion a year in overpayments. $76 billion every year from your taxes. That is a number I want you to realize. So yes, the 0.09% rate was bad news for UNH. But the real fear in the market that morning was this. What if the government actually turned off the tap on $7 billion a year? That is what stocks were pricing, not just a flat rate, a possible and a very large and very quiet revenue stream. Now you know actually what happened in January. If this kind of research is useful to you, hit like and subscribe. I cover exactly these stories 2 layers below the headline. It costs you nothing and it genuinely helps the channel. Move forward to April 6, 2026. The government published the final rule. The rate went from 0.09% to 2.48%. That is $13 billion in additional payments to insurance companies in 2027. And the crackdown on the fake diagnosis? Shelved. The government office responsible for all of this, CMS, said it needed more time to study the issue. Now here is the deal I find genuinely hard to look past. The person who made that call is Dr. Mehmet Oz. Yes, that one. He was confirmed in April 2025 as the head of the office that sets these rates. His financial disclosures showed he owned between $550,000 and $600,000 in UNH stock at the time of his nomination. In the prior press release, he wrote that stopping this fake diagnosis would protect taxpayers from unnecessary spending. He then published a final rule that did not stop them. But here is what almost nobody reported. That was not the only decision made on April 6th. On the exact same day, CMS quietly finalized a completely separate change. It rewrote the bonus payment system for insurance companies. Think of it like a grading system. Plans that score high enough get extra money on top of the base payment. CMS just made the grading easier. Eliminated 11 of the measures that were pulling scores down. With easier scoring, more plans qualify for the bonus. That unlocks additional $18.6 billion to the industry over the next decade. Two separate levels, both put on the same day, both pushing more money toward the same companies, and the person pulling both levels on $500,000 of stock in the biggest beneficiary. I genuinely don't know what to make of that. I don't. But here's what I do know. Two completely unconnected policy decisions. Same direction, same day. Decided by someone with a disclosed financial conflict in the outcome. The market covered Decision 1. Almost nobody covered Decision 2. That question has not been asked, and I think it is worth asking. UNH went up 11% and the market called April 6th a clear win. Analysts upgraded their targets. The story was over. But here is the thing. CMS did not say the crackdown is cancelled. It says it needs more time to study it. More time is not the same as never. And here is the number that I think every single person holding UNH right now should be asking about. UNH covers about 29% of all seniors in these private Medicare plans. Apply that share to the $7.12 billion annual hit that the crackdown would have caused industry-wide, and UNH's individual exposure is roughly $2 billion a year. $2 billion every year. That could be at risk. But UNH has never disclosed what percentage of its revenue comes from this diagnosis. That number does not appear anywhere in any public filing. Analysts looking for it cannot find it. The market right now is pricing UNH as if the threat is resolved. But nobody can actually see the number that would confirm that. The market cannot price a risk it cannot see. 3 things to watch from here. First, CMA said more time to study. The next proposed rate comes in early 2027. Watch whether the crackdown comes back in that announcement. Second, UNH is cutting 1.3 to 1.4 million members from its Medicare plans this year, exiting the ones that were bleeding money. Watch whether the higher rate actually shows up in their margins by mid-year earnings. Their medical spending ratio is sitting at 88.9% right now. The target is closer to 85%. Third, watch whether UNH ever discloses what percentage of its income comes from these retroactive diagnoses. If that number surfaces, it will move the stock. I bought UNH in January because someone on X said the price looked cheap. I made money in April, but now I understand what I was actually holding, and the picture is more complicated than that 11% recovery suggests. If you want to follow where this story goes next, subscribe to my channel. I will cover the next chapter when it happens. The government just handed the insurance industry a massive win. The person who made that call owned $550,000 in stock that benefited most. And the number that tells you the real size of the risk still does not exist in any public document. Is there a resolution or is it a delay?